As a finance professional in a disrupted business landscape, what does it take to be in demand? What does it take to attract great paying international roles? If you're an ICAN member, it'll just take one exam. That's all it takes to complete the globally recognized CIMA professional qualification and the internationally respected CGMA designation. As a CIMA member and a CGMA designation holder, employers will look at you as a finance professional, constantly acquiring new skills to add value to the business. That's why they'll be willing to pay premium to hire and retain you. If you have 5 years of relevant experience and are an ICAN member, you can directly sit for the final exam of the CIMA Professional Qualification, the Strategic Case Study exam. Start studying the CIMA Professional Qualification. Prepare to make an impact.
Good evening, my professional colleagues, friends of the Institute of Chartered Accountants of Nigeria. Ladies and gentlemen, thank you so much for being here today. It's the 27th day in the month of July 2023. Our time truly flies. And our dear Institute, like I always mention, they've created this platform for us to learn, unlearn, relearn, and also to learn from experts in different industries. My name is Fumi Olani and is ICAN on Air today. We are discussing something quite phenomenal. We are discussing something interesting, something that has to do with us, individuals, and the unit we belong. So family. Today's topic is something that is interesting because it's about family business and succession planning. And our guest is a special one also. We have in the house today a Siri Agbeyi FCA. She's a partner, PwC Africa, family business leader. I guess we'll go on a break, and then when we'll come back, I'll take the profile of the special guest, and then we'll meet our special guest very soon. Let's go on a commercial break, and we'll be right back.
Tax online. That is the easiest way, to pay your tax.
Companies income tax, value added tax, tertiary education tax, pay with tax program, for returns when due, pay your tax correctly, and get your e-tax clearance. Pay your tax online.
My better people for Bodo Nigeria, I don't bring better information come give you now. To pay your tax now, it don't dey easy like ABCD. With this new Obonge platform where the Federal Inland Revenue Service, FIRS, don't bring come, then they call them Tax Promax. With this one, now for your house or office, you go just dey pay your tax. And if you want pay your tax, make you log into www.taxpromax.firs.gov.ng. This message, now the Federal Inland Revenue Service, FIRS, they bring them for now.
Pay your tax online.
You're welcome back from the break. Remember, it's still your special program, ICAN on Air. Like I mentioned before the break, I mentioned that we have a special person in the house, and she is a Siri Agbeyi FCA, a partner in PwC Africa, family business leader. And I'm going to just take a profile. Isiri is a partner, and she used to be in PwC New York. She heads the People and Organization Unit of PwC, and she's responsible for compensation design and structuring. She's responsible for immigration, for personal compliance services to companies in different industries. She also leads the private wealth client team, which provides specialized services to high net worth families and entrepreneurs. Isiri is also a specialist in sustainability. She is a specialist in cross-border restructuring, tax planning for mergers and acquisitions, including deferred taxes for group audits and corporate compliance. Isiri holds a BSc honors in microbiology from University of Ibadan. She's also a fellow of the Association of Chartered Certified Accountants and also Chartered Institute of Taxation of Nigeria. This is a series that has wealth of experience in different industries, and she serves as a non-executive director on the board of several companies. She mentors and writes articles, which I am privy to. I've seen a lot of that, and she has won several awards for her leadership roles and contributions in the Nigerian economy. You're welcome, Isiri.
Thank you very much, Fumi, and I'm so glad and honored to be here. I particularly loved the advert and was dancing along as we went, but thank you so much.
Thank you. So that sets the mood. Thank you very much for being here. We're really happy to have you. We can only have first-class experts in discussions that we have right here. So for me, you are the expert in this field, and a lot of us are not opportune to know about what you do. So that's why ICAN has created this platform, so we can learn from your wealth of experience. Despite the records of successes and fortunes that family businesses have also received, I mean, I've not seen commensurate appreciation and recognition on this business in Nigeria. So we want to know, what exactly do you think family business is, and why is it unique for us to know about the characteristics of family business?
Okay, so it's very interesting you asked that question, and I'm so glad that we get to discuss it on this platform. But just going straight to the question, right? So family businesses, it's what it is, a business that's generally run by a family or controlled by the family. And we tend to see a lot of that every day. It's just we probably don't pay mind to the fact that there is a strong connection between a business and a family concern, and that there might be unique issues that need to be delved into properly. But on the larger scale, some of us know them to be just the SMEs, and we take them for granted. So the SMEs are the ones we say are the backbone of any economy. They're the engine of the economy. These SMEs are the same ones that grow to become the mid-sized companies that we know, or the very big global companies that go across continents. So when I look at global families or family businesses, there are quite a number that are family businesses. And I'll just give examples. There's Samsung. Samsung is a family business. There is Mars, the business behind the Mars chocolate that we eat, or Hershey's brand, or even the Louis Vuitton bags that a lot of people know. That's a family business. In Nigeria or in Africa, when we come close, we can talk about Dangote. That's a family business. We talk about Hess Holdings. They started somewhere, right? And they've grown to become this very big brand. They might then look disconnected to the family over time because they professionalize and they become more formal. But at the back of it, there is a family that controls it. So in simple terms, that family business is the one controlled by the family, and sometimes heavily is influenced by a family. And the general rule also is that one family business is not another family business. Once you've seen one, and they're going to be different as we speak. But because of the role that they play in the economy, they deserve the attention, the most attention than I think any other group. So this is why it's important, and I'm so happy that we're discussing it on this platform.
Interesting. Thank you very much. But, when I listened to you, I could understand the fact that different family businesses, they differ in their own, they're bespoke for each person. There are different types. So, in your opinion, I'm speaking as a layman, but you are the expert here. What are the types of family businesses that we have, and what makes them different from each other?
Yeah, so I think the types would generally be according to different criteria. So it's either you're looking at it based on their size, perhaps revenue size. And like we said, some of them might just be macro or nano entities. Even the small shop that you see, mom and pop shop that you see at corners, they are family businesses. If we watch TV, there's this cake by boss or boss by cake or something like that bakes cakes. That's your typical family business. They employ the cousins, the brothers, the sisters. So again, size might be the distinction. Another distinction might also be the level of control. Another distinction might be whether or not they are listed on the stock exchange, because of course some of them grow to then be listed on the stock exchange, and then their wealth is diversified as they go along. So the types will differ based on the criteria, but generally the similarity is that you have a family that's in the core that's managing affairs or influencing affairs or controlling affairs.
Okay. So can I be correct to say a family business may be the same with a family office, or can you shed more light on what makes the difference between the two?
Oh, there's a huge difference between the two. So when we talk about family businesses and the issues that are unique to family businesses, we look at two key circles, the family and the business. And the reason why that is important is because sometimes the sustenance of those family businesses gets interrupted or disrupted because of family ties, such as love between family members, jealousy, sometimes between family members, or envy, personal bias that clouds the reasoning for business, great kind of quality decisions that will be made by businesses. So that interaction is very important to then say, how can we carve out the family separate from the business, but still take the benefits of the family and run that through the business? And some of the key benefits that come through from just having the family still online. Yeah, okay, I'm still on. Very rarely would you find family businesses that have thrived for so long dismiss, staff that have worked for them, especially loyal staff. So loyalty is a very key part of the family business. The second thing as well is they are generally long-term focused and not short-term focused or driven. So I give a good example. For instance, where you look at businesses that have grown to be so diversified in terms of ownership interest, so many shareholders, especially those that are listed, more often than not, the gains that the shareholders want are in yearly dividends. So there's usually a short-term view to getting profits and being paid a dividend on an annual basis. Family businesses, on the other hand, are quite different. So they've built a business, is largely owned by them, they dictate the rules, and are not under so much pressure by either the capital markets or the many interests of many shareholders to do things a certain way. And so because of that, they take a longer term view to things, which is why when we look at the Edelman's barometer, so there is this company or firm that typically looks at trust and assesses the trust level of businesses, you would find that globally, across different continents, family businesses garner more trust over businesses that are not controlled by family. And this is a view that has been taken across continents. So what this assessment said is that 75% of the people surveyed trust family businesses more than businesses that are not controlled by families. And that's also because of that inherent advantage of that long-term view. So they believe that they will stay for the longer haul. And we even saw that during the COVID or the pandemic, where when we did our survey in PwC, we had a lot less layoffs by family businesses than companies that are not necessarily family businesses. So they tend to hold on to their staff. They tend to want to solve a problem in society, which is why they stand out above the rest. And any economy that's not protecting the interest of family businesses loses big time. So the Samsung I called at the beginning, the Walmart that I called at the beginning, the Louis Vuitton, these are family businesses that have stayed and the test of time, and also have support from the governing environment or their governments to continue to thrive, because they are seen as the engine of the economy, whether it's from the small businesses to the top size businesses. They are given a lot of attention. So I think in Nigeria, we do need to start to direct attention there, because there are inherent advantages with that long-term view, which can then accommodate some of the developmental needs that we need over time in Nigeria.
It's interesting the conversations that have come up here. And I'm really happy that you have mentioned a lot of things that are perhaps new to some of our viewers. So we all knew what happened during COVID and the layoff and all of that, but nobody really thought about separating the general business from the family business and the results, what happened eventually from your survey. So that's some level of experience you have brought to us today. So I just want to recognize some of our audience. Fatai Temitokwe, we see you. Emmanuel Ibrahim, Samuel Odebumi, Oyedoku Sunday, Idoho, Fatai, Odetunde. So feel free to draft your questions, and our special guest is Siri. We'll be very happy to take them on today. So I just want to particularly ask about a document which the family business uses. I know of it as a constitution. So you say so what's the family constitution here? And can you educate our viewers on the unique features that must make every family have this particular document?
Yeah, so thank you, Fumi. I think the family constitution, and I'll try to introduce it coming from, where I stopped, around the family and the business, all of them have inherent characteristics, and we then need to merge the two. In trying to merge the two, one of the critical things that we need to look at is governance and how decisions are made. One of the ways, or one of the things that we get wrong, why family businesses do not stay or live beyond the founders, is sometimes the missing link is either between today's plan, short-term plan, and strategic plan for the future. There's a missing link created, and trying to really consolidate on that gap and seeing how you can bridge that gap. The other thing that we find is also the fact that, there are no rules of engagement set, because we do not appreciate that there are subsets within a family business. The subsets clearly, from all I've been saying, is the family and the business. Now, you asked a question earlier around the family office. The family office is quite distinct from the family business, because that office is a platform for the interaction of these two subsets. So you have a family business that is generating money, is the cash cow. It might be that I set out today in my environment, I thought importing the best type of fabric will serve my society because of the Owambe parties that we do in my society. And the best way to meet their need is to get the best fabric from whatever jurisdiction, and the business thrives. Or it might be that, there is a particular product, maybe a biggie, for instance, a food drink, anything it is, even Coca-Cola. Coca-Cola is a family business, by the way, to satisfy consumption. And I design a product that meets the needs of my community. Now, having done that, you might succeed. There is a lot of money coming in. It's your cash cow. However, times change. We have big headwinds that could potentially halt this business. We have also disruption. For instance, technology is a big example that's disrupting almost everything that we know. And so it means that family businesses must be strategically set for success. By thinking ahead about how this could potentially disrupt this business I set up to feed my community. Perhaps their taste buds might change and everyone is, going on about health. I don't want to drink this. Maybe it's Zobo that makes more sense. And so I want to mix my portfolio. Now, in doing that, and in trying to spread my reach so that the wealth I built over the years from the one product or legacy product I started with, it takes time. And it's not something that the founder would probably have the time to do when you've been ingrained in a cash cow that you've sustained over the years. The family office keeps you on track because then you set a dedicated platform to say, how can I make sure that this wealth continues? How can I make sure it is diversified? How can I make sure it's paying attention to the disruption that could potentially happen while nurturing the cash cow that I have? Before that 10 years, when this could kick in, I already start to put in efforts through the family office to build other business angles and maintain my private wealth. The other thing then is to say, what are the rules of engagement between the family and the business? And the one thing that you want to set aside is your constitution. The constitution is pretty much like the memo for the company. Anything that you do on the company side, you must replicate it on the family side. Otherwise, you'll be shaking like a jellyfish. And so what the constitution does is to say, what are those areas in the company side that need to happen here? One critical thing is decision making. You don't just want family members as you grow from first generation to second generation, cousins. If you have maybe several wives, there is a polygamous family. There are different children from different branches. It's not everyone that has the ability to lead the cash cow. And so you want to deliberately say, what are the rules of engagement within our family? To say, look, we're all doing this in our best interest. This pot that we started with that was fetching us this money initially, now that the mouths have increased, we need to be deliberate about who will continue in the next generation so that we have more to eat. And so the family constitution is that document that will tell you, how do we admit members into the business? Is it by bloodline or is it by merit? What's our employment policy? How do we own the business so that over the years, our wealth is not fragmented? And one of the things you can then do is to say, oh, perhaps we might have a shareholders agreement. And so the shareholders agreement will say there should be a right of first refusal if a party in the family wants to divest of their ownership shares. But what it also does is try to curb entitlements, because sometimes as family grows, family members become entitled to some of the share of the business. Having those discussions up front and communication up front helps to manage it a great deal. Why? How does it do so? We have a model called a three-circle model that tells you or segments it to say, who is in the family as an owner of the business, who is in this family business as a worker in the business, and who is not even doing any work at all but is a family member. There are intersections in those three circles. When you draw that three-circle diagram, it's like a Venn diagram. One circle, another one overlaps on the right, another one overlaps on the right. You'd find that each of those different parties have unique differences. As a non-owner, should you get the same income as somebody that is an owner? Should you get the same income as someone that is working in the business? So because you started discussing that up front and it's set out in your family constitution, it goes a long way to solving conflicts. It goes a long way to preempting any disputes that might come up when the founder goes off the scene. So those family constitutions would then be what you breathe in. It becomes the foundation for the culture in the family. And then everyone gets used to the fact that, oh, even if my brother Tayo is in the business and working so long and gets this income size, it's for a good reason, because I understand the perspective we're going as a business. And if I want that, then I have to make my way into working. So those discussions upfront, communication is what is usually missing, and why family businesses will start and then they disappear.
Oh,
That's
wow.
what the Constitution does.
Thank you. So, I mean, I listened to you very, very well, and all that was sinking in is don't miss family with pleasure. So, thank you very much for that very interesting conversation that you had and the comments that you gave. So, we have an audience here. We recognize Riwa Akiemi from United Kingdom. We also see Doyin Adelabu. She mentioned something interesting, and I am just seeing her comments, and it's quite interesting that this is one topic that she's been very interested in as an accountant, and she would like more documents to read up on. So yes, we'll make all those materials available. I mean, you have a very knowledge field, a series here. I guess we'll want to go on a break, and we'll be right back. Get your questions ready. It's still a Siri in the house. She's here to tell us everything we need to know about family business. We'll be right back.
Tax romance. Pay your tax online. That is the easiest way, to pay your tax.
Companies income tax, value added tax, tertiary education tax, pay with tax program, file returns when due, pay your tax correctly, and get your e-tax clearance. Pay your tax online.
My better people for Obodo Nigeria, I don't bring better information come give una. To pay your tax now, it don't dey easy like ABCD. With this new Ogbonge platform where the Federal Inland Revenue Service (FIRS) don't bring come, then they call them Tax Promax. With this one, now for your house or office, you go just dey pay your tax. And if you want pay your tax, make you log into www.taxpromax.firs.gov.ng. This message now the Federal Inland Revenue Service (FIRS) they bring am for now.
Pay your tax online.
Security is key to national development and growth. No nation can be truly economically successful without peace and stability, or when its security is threatened. This is why we must perform our civic obligation of duly paying our taxes so as to provide the needed resources for government to secure our lives and properties. When we pay our taxes, government is provided with the needed resources to equip our security agencies for a safer Nigeria. The money we pay as taxes is used to purchase equipment and hardware, invest in intelligence and other sophisticated technology, as well as cater for the welfare of all security personnel. A secure nation is a prosperous nation. Nigeria is safer when we pay our taxes. FIRS, it pays to pay your tax.
You're welcome back. It's still your special program, ICAN on Air, and we have in the house a Siri Agbeyi FCA, partner PwC Africa, family business leader. And remember, we're talking about family business and succession planning. Hey, Siri.
Hi,
from the break.
Okay. Yeah, thank you.
So I want to particularly ask about what you feel. You've mentioned a lot of things about succession plan and also on the family business. Do you think there's a format or there's a template for people, for our viewers to prepare the succession plan for their businesses?
Yes, there definitely is. There are key things you need to watch out for, which is stemming from the concept that a succession plan is not an event, it's a process. Right. And by it being a process, it means that you must make deliberate effort to start early rather than starting late. And what are we trying to achieve when we talk about succession planning? It's really leadership transition. How do we make sure that this business also continues to thrive even when the leader that we know goes away? Secondly, how can we ensure that the leaders that then step in don't feel that they are undermined or cannot feel the shoes of who was there before them. And we see that every time in normal organizations, which are not necessarily family businesses. Again, what makes the family business unique is because of the familial ties. So you want to then start thinking of, oh, how would it feel if I don't choose this my daughter, and I choose instead my son? And is my son even really fit for it? Do I just automatically take my son over my daughter just because he's the firstborn child, and it will be disrespectful if I don't take him? How can I manage that process? So in fact, there is a template, and the template is preparing ahead. One, making sure that communication is very well, laid out, and that you're also holding the hands of who the leader would be while you are there. So a shadowing of sorts. You also have to finance your succession plan, by the way, because at the end of the day, you don't want to have leaders that are at the same level and getting the same reward from the business over time. So you want to start to define what the job descriptions basically would be for those who will succeed. What also makes you succession planning very interesting with family businesses is that the founder typically wears a lot of hats. When you start your business, you are the entrepreneur, you are the marketing manager, the business development manager, you are everything. You're the one also chasing, your account receivables, because a lot of people see you and they shake. They might not even respect sometimes the employees that come to collect those account receivables, because they know and associate value that they've received from that business with the founder. And that's something that you need to separate before the event of an exit. So it's the exit that is the event, but before that time, the process is the planning. So to plan for that, what are the different things that you need to take on board? There are actually templates that would lay out the different things you should not forget, which include even your board composition, include also the staffing below the person that will potentially lead the business, and how you also reward. All of these things need to be laid out. And maybe it might be over a 5-year to a 10-year period. You lay it out to say in year 5, you maybe move from being the CEO to being the chairman. And maybe if it is your child that you feel is worthy enough to be there because of merit again, it might not also be your child, because really sometimes you might have that the children are still very young and they can't take leadership roles at that time. So how do you put a successor in between who is going to hold the reins of the company until such a time when the children are ready to take position? Or you might even say, oh, the succession plan is not necessarily going to be that I continue to run this business and earn money from this business, but that I want to exit the business, so sell the business to someone else. And we've seen that over the years with some of the businesses. For instance, a good example is Forte Oil, the founder of Forte Oil. We've seen that has changed hands, and that is a plan. Now, for him to have done an exit, or for any person that's going to do maybe a trade buyout to say, I don't want to hold this business within my family, I'm going to sell it, there are things to consider. And I'll give a good example. Sometimes when we start businesses, we start them so passionately that we have our personal assets that are sitting inside the corporate assets. Thinking about how to unmingle that, if there's a word like that, and it has consequences. It has accounting implications. It has tax implications. Take, for instance, something that we had gone into, the succession plan had started, and we were looking at the books to say, how do we transit? How do we reward over the years? And then we look at the asset base, and we see that some of the assets, the land on which the building sits, the land, the documents are in the individual's name. But when they had done the financial statements or prepared, nobody had really looked at that. Again, your auditors are very good to, have in this process, because, and the accountants as well, making sure that you account properly for the assets that you so-called have. So these had been merged and had been valued as the property of the company, only to find out much later in the year that the land is actually for the man, or the family, the building on top is funded by the company. How
Companies.
do you dissociate that without triggering a capital gains tax? So you're paying already a tax out of your own personal wealth for something that could have been avoided, and when you start to think about this kind of structures for holding assets as well, you now start to think about not only during your lifetime, but also at the point where you pass on, because eventually all of us will leave. Yeah. And when that happens, there are also consequences to it. So you might ask yourself, is there going to be a probate? Probate is a process that you use for administering assets to the next generation, but it goes through the courts. And some of those assets may have to go through probate process where they have not been structured to maybe be held underneath a trust, for instance. That comes with a cost. And in Lagos, for instance, you pay a 10% of the value of those assets. So if someone passes and then those assets are left to go through the probate process, and maybe the assets include the building, cash in bank. Again, and cash in bank, it might be that you put next of kin. So maybe you said there, your next of kin is my brother or my sister. Your next of kin is not the one that will then be able to access that account. Oh. The next of kin is just your contact for the purpose of holding that account, a second contact. But a lot of us forget about that. It's all part of succession planning. So your estate by itself, you need to plan for that. You need to then look at a better structure for holding it so that you don't impoverish also the people that will have access to the asset, and you don't unintentionally halt or disrupt the flow of business. Because if we cannot access the assets because you have passed on, the business dies. And this is how businesses die a slow death. If you cannot fund the probate levy for going through that probate process, 10% of the assets, that's the end. If, for instance, they are mostly real estate, how do you fund it? Because you're not going to be able to liquidate the real estate and get cash to pay the probate. So you need to have prepared cash in bank already to say, assuming these are assets that want to go through the probate process, the next generation will have access to cash that they can use to process it. But if you don't want to go through that process, you might as well just start putting it in other structures. So succession planning is a whole lot. There is a template of different things that you want to focus on, but governance is very key. Tax structuring is very key. Accounting is very key. The reward is very key as well, because everybody wants an incentive to continue to do what they do and do it well. And you have to start thinking about your different family members, the business team as well, what's the right remuneration to give so they don't feel disincentivized and they don't leave at a time when you most need them. And you need to help the person who is succeeding you to also gain the same type of respect that you had when you founded the business. That has some social, economic wealth. And that kind of capital is not easy to get. It's intangible. You don't find them in the balance sheet.
Yeah.
So
Yes.
there is a science to it. There is a psychology to it. And it's those type of things you need to ingrain in the mind of the successor, in the mind of the family and the business that's going to be there for that person to lead. So it takes time, just what I've described. So 5 to 10 years might not be short. It might even be longer. But once you
Yeah.
start early, you're better off.
Oh, wow. Thank you so much. So we need to do the right thing now that we are fit for it. And I've been seeing a lot of questions on what you've said. Some of them, I will mention the ones that relate to how the companies can stabilize. There are a lot of, you have mentioned a lot of companies that are family business that is doing well. I also know that there are some that are weak, some that have died an untimely death. But I want to ask you, what do you think makes the family business struggle? I recall you mentioning, mixing, putting the experts in whatever field that would handle the family business. But there are also some family owners, family business owners that make their staff members do things for their own personal businesses outside of that business that we are talking about today. And I have a question on the screen also from Fagbola Temitakwa. Is related to what I'm talking about. It says, family business and boardroom politics. What are the survival strategies? Over to you, Siri.
That's a very interesting, yeah, that's a very interesting question. And I think it's one that also comes to life very easily in some of the businesses that we see. I don't think we can do away with politics. It's part of our existence, our natural existence as human beings. So even in the companies that are not family necessarily family business, there's always going to be politics. And when you look at politics, it's how do you manage relationship with people so that you also get what you desire. But more importantly, we want something that would interest the greater good as opposed to a selfish interest. And in trying to make sure that we get away from selfish interest, you want to be able to carry people along. When people feel that they are not carried along, they feel disenfranchised. And then you start to see those negative attributes like, envy, jealousy, why am I not getting the same attention, or why am I not getting the same reward as this particular person? And then there's scheming behind that could then, evolve into the boardroom politics, as we call it. Now, for the families by themselves, what I had mentioned earlier was around setting up constitutions and then just setting up a culture that starts to entertain the idea of differences in roles and positions and ultimately reward. So people then don't start to feel disenfranchised. And some of these things increase as the families grow bigger. So, for instance, you started off as husband, wife, you have children who are siblings, all of you in the same household. There is friendliness, there are no heirs. Everybody is just very happy, sweet,
Happy,
and loving.
very.
But as the yes, as the children begin to go out, get married, form their own families, those families will have their own different and unique values and ideals or beliefs. And it's very different then from what you started off with. Now, the way to make sure that everyone stays on the same page is to continue to hold on to those primary values that you started with, and to make sure that it's ingrained in the minds of all the other branches that this is how we do things around here. And look at the Jews. The Jews are a very good example of how this happens. Jewish children are brought up to accept the fact that they are born to satisfy the interest of their community over their individual selves. They grow up knowing it that way, which is why you find that if you go anywhere around the world, once you see one Jew somewhere, there's just that familiar community that continues to grow, and they pull each other up because they feel that I am continuing from where someone else has stopped, and I have a commitment to the future to make sure that what I enjoyed continues. So those ideals don't just come like that. No, you have to make sure that you teach, train, empower, and then when they become of age, it's easier to roll with it. It's also important that you then begin to ask yourselves, who are the family members that will take up, if you have those different families that have now gone and done theirs, you want to ask yourself, is the wife of my direct child also seen as part of the family business? And can they be part of the boardroom as well? Can they be on the board? Who are the representation of the owners? So some of the ways you do that is also through the family office. The family office is a big filter for who can then go on to the board and represent the interest of the wider group. And once you are able to accommodate some of their own peculiar interest at that family office level before you go onto the board that they are representing the families on, you start to reduce the incidence of those type of politics. It's not like it will totally go away, but it's a deliberate effort that you make to reduce those kind of divisions and conflicts.
Interesting. Thank you very much for that. I mean, there's always room for people to do better. I know families that siblings are in court right now because of the heritage, after the demise of the owner. So will everyone here, you're listening and you must do the right thing while we're here to operate. So I have some questions, but I particularly want to ask you a question around the plans, how indeed people should transit the wealth to the next generation. What would you say about will? A lot of us are used to the will system, and we know that the family business founders, they are quick to come up with a will. What would be your advice on that? And Victor Ogbe is asking a question. He says, where a business was set up by a family and ultimately goes public, where the family no longer has significant ownership control, can it be referred to as a family business?
Yes, so maybe the later question first, and then I can go to the last question. Yes, it can still be referred to as a family business because remember, I talked also about control and influence. Sometimes you might have that, and I think it was Ford, if my memory serves me right, that has different types of shares, and depending on the legislation, you might be able to divide the shareholding or the rights on shares, maybe rights to holding it and making a vote, and then rights to getting a dividend. So you'd have different classes of shares, class A and then maybe a class B. So some of these family businesses that are popularly known, are run that way, where they are still listed. They may have different types of shares or classes of shares that allow them to get a lot more in terms of dividend, or it might be they're not getting the dividends, but they can vote a lot more on the board. So those kind of things give them some rights over and above the very many shareholders that you have. And again, depending on the kind of listing. So for instance, in Nigeria, we have different types of listing where you might not have the entire shares floated on the stock exchange. That can also influence whether it continues to be known as a family business. All in all, you want to look at control, you want to look at influence. And even if they don't have controlling shares, they can influence most of what goes on in the business. It can still be referred to as a family business. So you need to look beyond what you see on the surface to then understand whether it continues to be seen as a family business. Where you have diversity in terms of the shareholding, too much diversity, and no controlling shares, is less likely to be a family business. Now, in terms of the wills and the trust, there is a critical difference, that I think I've kind of alluded to even in my discussion. And some people can actually take advantage of the differences there to yield some sort of planning. So the will by itself, states to you that these assets have passed on to someone else, perhaps upon the demise of the maker of that will. It has the possibility of being contested. Whereas you have another type of vehicle called a trust, which you can set up while that person is still alive. And it is effective immediately it is created, the living trust, as use that term, the living trust, so that it helps you with that concept of succession planning that I've been talking about, where you're getting people more prepared ahead and while the founder is still alive, as opposed to a will which only takes effect upon the demise of the founder. So there are very critical differences. The other thing as well is in terms of asset protection. Assets in a will are strictly assets legally owned by the maker of that will. So they can be taken over by creditors through lawsuits as well. Whereas a living trust, on the other hand, can help you protect assets from creditors and lawsuits. Why? Because when you set up a trust, what you're effectively doing is you're splitting legal ownership from beneficial ownership. So there will be three types of parties in that trust. One would be your founder or the settlor. Another would be the beneficiary who has the beneficial interest. The third will be the trustee, who is now the one holding the legal interest. So you see, you split legal from beneficial. Before, it was all inside one person, which is what you typically have in the will. And once you split legal from beneficial, it's very then easy for you to stop creditors from laying claim of assets because it's in another person's name. I think the very good example that comes to light for me is the footballer. I don't know if you remember the footballer
I
who's
do.
getting a lot
The
of money.
smartphone.
Somebody can help
Yes.
us in the chat.
Yes, we
And
know.
his mom
And his
is the
mom.
one that is getting money. And then the wife now said, "Oh, I want to divorce," only to find out that she does not even have access to the wealth. The boy
Yes.
says, "Me, I don't have any money. Money is legally held by my mom." So that is a simplistic form of trust, although maybe the way that was structured was like blindsiding the woman, which is not really healthy. But those are some of the advantages you have, in addition to maybe confidentiality. Wills are often public, as the records can be easily accessed from the probate registry. And then what I mentioned before was around probate. Once something is under a will, you then necessarily have to pay a levy, to the court to be able to access the asset. And in Lagos, it's 10%. Whereas with the trust, you wouldn't have had to pay that type of levy. You can avoid it upfront.
Interesting. Thank you so much for that. And I heard you say it's unhealthy the way he has been able to harness his transition and the will or whatever assets he has to his mom. So everyone may be laughing about
Yeah.
that. So I know that there's a dynamic change now in Nigeria. At least today, we're all aware of changes in the presidential or documentations going on here and there, and we all see it on social media and even in the news. So if the president calls Isiri today to advise on the economic to advise the economic team on the approaches for establishing family businesses and succession plan, what will then be your recommendation? And I would just like to take this in 1 minute.
Okay, this kind of hard question that you're giving me. Anyway, I think some of those things lie in the fact that these are the bedrock of our country, whether we like it or not. And if we start to look at the benefits that family businesses serve in society, then we can start to recognize that certain things need to change. One of the things is around implementing policies that encourage entrepreneurship and skill development. I do know that there are several agencies that have been set up, for instance, the Industrial Training Fund, where a lot of companies have to pay 1% of their payroll for training and then recover 50% much later. Can we reassess that and ask ourselves, what has this achieved for us as a nation and how can it be better? Or even some earmark taxes like the tertiary education tax fund. The profiling of our universities have actually gone down even from the time that that act was set up. And we need to definitely ask ourselves, what is the tax collection being used for? Are tertiary institutions really improving? So skill set development is very critical so that the family businesses have a platform or a pipeline of skills that can come in. And again, we're dealing with the jackpot syndrome. So we definitely now need to start looking at remote work channels and tax regimes around those remote work channels to accommodate people who have even gone outside the country and can still serve the interest of the family businesses. The other thing to do would be to facilitate financing for family businesses, because when you look at some of the SMEs who can then grow into being the future unicorns of our country, most of their biggest challenges is around financing. How can we make sure that we give them finance as they need it? How can we unlock capital even in the interaction between them and bigger organizations that hold on to their payments and eventually become adverse to their growth? Those things rely on our monetary and fiscal policies. Today, we're looking at NPR rate of 18.75%. We're looking at inflation of over 22%. We're only seeing interest on deposits. I mean, we have only 4% on that. And people are asking, how do I benefit from securing my money in a bank? And how do I make sure I get access to loans that are not too costly and my businesses can thrive? So it's very critical to start to look at agencies that can give cheaper capital to some of these family businesses and to also help them be ready to receive it. So again, some of it depends or relies on the businesses themselves. It's not just government. I think the other thing is really around investing in critical infrastructure. We talk a lot about the ease of doing business in Nigeria. Power is one of the greatest issues that family businesses face. It's very important that we get it right so that we can unlock industrialization and get ready for the age where everything will now be electric vehicle, because that is the future. We're still using fossil fuels. So we need to industrialize sharp, 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 sharp. We need to make sure our family businesses can export their goods across the continent and encourage interregional trade under the AFCA regime, and also start to even export to European countries and the West at large. So I think those three key things will be what I would encourage the government to look at. And it's not different from what you would ask for a business, but again, with particular attention to family businesses, because they contribute 50% of the employment in Nigeria.
You're indeed the real plug for this topic. Thank you very much for that. So in closing, ICAN is always open to ideas that will positively advance the development of its members. What are the suggestions that you have that we can use in filling these knowledge gaps for opportunities in this green area? I mean, a lot of these areas that you have mentioned it hasn't been exploited by a lot of people. So what would you say ICAN should do to ensure that the knowledge is breached? In 1 minute again.
I think one of the ways. Okay, 1 minute, quick. I like this type of session, ICAN on air. We need to encourage it more. We need to go to schools. We need to preach the message so that the younger ones who are coming up and setting up their family businesses can do it the right way, and also start to get some mentorship programs in place to make them cultured for success, because our youth is the future in this country, and we have a large population of youth. That is where our asset is.
We are the youth.
I'm one of them still. I'm still energetic.
Thank you very, very much for being here with us today, the 27th of July, Esiri. It was really, really mind-blowing being here with you. And we want to say thank you to Esiri. She's the partner.PwC Africa Family Business Leader, and she discussed family business and succession planning. And we had so much fun being with her in the studio. We'll say thank you, and we hope that we can call you next time.
Absolutely. I'd be very honored to come back again and do this physically too, so that we can all chat, be merry and happy. I love that.
Thank you so much. Thank you. So again, we will have some announcements to read out to us. There's a workshop on forensic audits and excess bank charges and investigative reporting. It's a virtual platform, and the date is July 31st to August 1st, 2023. And the fee is 25,000 naira. Please feel free to reach out to the Institute if you want to be part of this very insightful topic and training. So I want to say thank you, everyone, for being here. It was good to share knowledge on this very interesting topic. I recall her mentioning the 3-cycle model: owner, worker, and someone just not doing anything within the business. And we have to take the leadership of our business to the next level by doing the right thing. So succession vehicles, think about the succession vehicles that you want to use today for your business. It doesn't matter how small, or it doesn't matter how big your business is. You can make that decision today and you will never regret it. So I want to say thank you again. My name remains Funmi Olani. Till we meet next week on ICAN on Air. Have yourself a great evening.